Thank you, everybody. This is actually my first time here at this event. My wife was actually meant to come and see me speak until she realized ADFW was not Abu Dhabi Fashion Week, but Abu Dhabi Finance Week. But on a serious note, I'm honored to be asked to participate and have this speaking slot, so let me get started. We all wished we belonged to the line on the left, but sadly, we know that's not the case. What if I was to tell you all that it wasn't $10,000 a Bitcoin when I started Phoenix, but it was a mere $248? Since we can't change the past, there is no point in dwelling on what's already happened. So what I want to do today is take the time to tell you what's happening in the world of crypto, why it's happening, and what we can expect the future to hold. Everybody is talking about Bitcoin as it hits the long-anticipated milestone of $100,000. But how many of you know why this is happening and why now? So let's look at some facts. While there will be only 21 million Bitcoins, 19.8 million are already mined, of which 4 million are either lost or not accessible. How many of you know that the daily supply of Bitcoins from Bitcoin mining companies such as Phoenix is only 900 Bitcoins per day, which on today's value is around $90 million US. However, the demand on a daily basis from ETFs alone is on average 10 times this, with some days this figure hitting over $1 billion. Let's look at it another way. If every millionaire in the world wanted to own just one Bitcoin, there are not enough Bitcoins available, and this doesn't take into account all the Bitcoins being accumulated by governments, banks, and funds each and every day. Imagine out of 19.8 million Bitcoins that exists, there are over 58 million millionaires in the world, but only 900 Bitcoins produced every day. Let's take a look at who is buying all the Bitcoins and ultimately benefiting from what you are seeing happening and reading about every day. The ETFs, BlackRock, Grayscale, Fidelity, have all seen inflows into their Bitcoin ETFs with astonishing volumes. BlackRock's ETF, which is not even a year old, is larger than its gold ETF, which has been around for 20 years. We have all heard of Michael Saylor from MicroStrategy with his relentless desire to acquire Bitcoins for his company, a strategy that has paid off very well. Miners such as Marathon Digital, Riot, and Phoenix, who mine Bitcoins, are obvious beneficiaries. For those not familiar with the Phoenix story, we built across the street from where we are sitting now in ADGM, the largest Bitcoin mining farm in the entire region. The site may be only 2 years old, but we have mined with our Abu Dhabi partners over 10,000 Bitcoins, which at today's price is over $1 billion US. But most importantly, let's look at the non-corporates. We see for the first time some of the biggest, including Western governments, holding the largest Bitcoin stockpiles. And surprise, surprise, the largest holder is the United States of America, followed by the Chinese and the United Kingdom. Correct me if I'm wrong, but doesn't this already constitute a reserve when the government holds an asset class for its own strategic benefits? While all of this is happening, it's worth noting that retail adoption has yet to gain any noticeable traction. While Bitcoin and cryptocurrencies are a relatively new asset class and born in 2009, the industry capitalization is now in the trillions of dollars. The fact the US government has now not only changed its stance, but taken an active interest to adopt and accept Bitcoin is a testament to what's coming in the future. Jerome Powell, the chair of the US Federal Reserve, said Bitcoin is just like gold, but digital. And while it's not a competitor to the US dollar, it is a competitor to gold. This statement alone means that he sees Bitcoin as an asset class like gold rather than a transactional currency like the US dollar. It was pretty obvious, especially after the outcome of the recent US election and crypto-friendly stance of the Trump administration, that Wall Street was given the green light to dip their toes. And what we are seeing is them dipping their toes, as this is only just a start. Regulatory tensions are easing, with US firms entering the crypto space and striking collaborations with leading crypto players. Trump has chosen a very pro-crypto candidate to be the head of the US SEC, Paul Atkins. Cantor Fitzgerald has taken a 5% stake in Tether, the world's leading stablecoin operator, managing around $100 billion US. Members of Trump's administration are wanting to pass a bill to create a US Bitcoin reserve, where they plan to acquire 1 million Bitcoins over the next 5 years. Let me put this into context for you. That would mean 500 of the 900 Bitcoins mined every day being taken out of circulation. The price of Ripple has been rocketing as it expects a fair resolution to its court battles. Tesla has Bitcoins on its books. Microsoft is considering adding Bitcoins to its balance sheet. Corporate filings for Amazon reveal that shareholders have requested it to hold other asset classes that pay higher yields than bonds and offer better returns, and named Bitcoin as an alternative asset to put on their balance sheet, as it holds around $100 billion, citing MicroStrategy, whose shares have outperformed over 500% that of Amazon. And this is what is announced publicly. We don't know those who have not made their plans public yet. So I have seen Bitcoin at $248, I've seen it at $10,000, and now we've seen it at $100,000. So the million-dollar question is, where is the price of Bitcoin going? A year ago, I was allowed to give my forecast, but this year, being on the board of a listed company, I'm told I have to be careful what I say. So all I can say is that I see it much higher than where we are today. But let's look at what the industry professionals say. We have Tim Draper calling for $250,000 by 2025. Mike Novogratz from Galaxy Digital looking at $500,000. Tyler Winklevoss from Gemini calling for $500,000. Arthur Hayes from BitMEX, $750,000. Kathy Woods looking at $1 million. And last but not least, head of MicroStrategy, Michael Saylor, has his eyes set on $13 million per Bitcoin by 2045. Remember, his biggest fear is waking up in the morning the next day and there being no more Bitcoins available for him to buy. The interesting thing to note, besides the targets themselves, is just how far out people's vision goes, which is a clear testament that this is an asset class here to stay. This table shows how Bitcoin has fared against other asset classes over the past 10 years. And as you can see, it has been the star performer in most years, outperforming the next best asset class by multiples. For 2024 to date, it is already over 130%. For those of you who don't know me or what it is we do, I am one of the co-founders of Phoenix Group, which was established in 2017 and today enjoys the title of being the first multi-billion-dollar crypto mining company in the region to be listed on the stock exchange here in Abu Dhabi. We have operations across the United States, Canada, Europe, and the Middle East. We have designed, built, and operate the region's largest mining farm here in Abu Dhabi, which in 2 years alone has mined over $1 billion of Bitcoins. While we may have been listed for 1 year, Phoenix mines over 1% of the world's Bitcoins. As well as mining, we provide hosting services to our clients in our data center locations, and we are also the exclusive distributor of various crypto hardware equipment across the region. As well as being homegrown in the UAE, we enjoy strong relationships in the region, as well as the UAE, with the support of the UAE government and the support of our leadership. People often ask, what is the importance or even the benefits of Bitcoin mining? So let me try and summarize the key points, as this is something Phoenix started off with and does very well. Mining a Bitcoin is facilitating and validating transactions on the blockchain itself, for which miners such as Phoenix get rewarded in Bitcoins. Mining creates fresh or virgin Bitcoins, ideal for a reserve purpose, for the use as an exchange, or for liquidity. Any government, sovereign fund, or corporate who mines their own Bitcoins can stockpile and acquire Bitcoins at prices lower than the current market price. Jurisdictions favorable for Bitcoin mining attract considerable FDI and talent, along with economic prosperity. Anyone with access to power, capital, and equipment can mine Bitcoins, since it is a decentralized asset.